Welcome to Mining Over Canada. Join the Canadian Securities Exchange and our partners in a first-hand look into our country's vast mining landscape.
Hi, my name's Anna Serin. I am Director of Listings Development with the Canadian Securities Exchange, and I am joined today as part of our special presentation, Mining Over Canada, the wonderful Rick Rule. Thank you so much for joining us, Rick.
A pleasure. Thank you for having me on.
I think no matter what you do know or don't know about mining, you do know that Rick Rule is probably somebody that you want to be listening to in the sector. So very much appreciate that you're going to bring your voice to this dialogue. Let's start off and tell us about yourself.
Sadly, 67 years of age. Have been principally involved as a natural resource investor all of my adult life. I'm American by birth and by passport, but I emigrated to Canada in 1970 to attend the University of British Columbia, which I did, got a wonderful education. Didn't let the university get in the way of my education. Vancouver was, in the decade of the 70s, a really amazing place to witness the commodities boom and the mining stock boom. And the consequence of that was that the early years of my education were really rocket fueled. If you can imagine engaging as a very young man in very long conversations with people as varied as Murray Pezin and Peter Brown and folks like that at age 21, 22, 23. First of all, it was intoxicating, I might add, in every sense of the word. But it was a wonderful way for a young person to cut his teeth in a very exciting industry. So I've been a beneficiary as well as a participant in the Canadian mining scene since my early 20s.
And then you developed Sprott, right? Sprott was a part of it, or what ended up becoming Sprott you developed.
I built a firm called Global Resource Investments that was both a brokerage firm and an investment management firm. And I found I was quite successful building the firm, but I actually built the firm to the extent that running the firm was getting in the way of doing securities analysis. And I learned that what I really enjoyed was securities analysis rather than running firms. And so I sold my business to Eric Sprott, who had been a long-term competitor and client and friend, so that a young man named Peter Groskopf could run both of our businesses. And both of us, Eric and I, could devote ourselves to securities analysis and speculation.
What year was that?
2011, if my memory serves me correctly.
Wow. Okay. And so now you manage Sprott down on the other side of the border. Is that correct?
I manage a lot of the Sprott U.S. business. We've developed, I should say that Sprott, while it's Canadian domiciled and co-listed, the vast majority of the Sprott business is in the United States. And the passive U.S. business, which is to say the exchange-listed business, I don't run. And I no longer run the equities management business in the United States. I oversee them, I guess, if that's the right phrase, but they benefit from a light touch by me. They're extremely well run by the people who run them.
So I think that you have a very unique positioning as far as what you think of the sector. This very much is a Mining Over Canada. We're celebrating the mining sector from coast to coast, and we've had the opportunity over the past 5 weeks to be able to talk to many experts all the way across. You have an interesting perspective because you have a tie to both Canada and the US. And have been so heavily focused in the junior space in the mining sector. I think that you're able to perhaps speak a little bit to how does Canada set itself apart from other countries? Or if that's maybe too broad of a question, even how does it set itself apart from the US?
Well, from a capital markets point of view, at least a junior capital markets point of view, the United States doesn't have a mining industry. It isn't even an afterthought. The junior mining industry in the United States is mostly Canadian, although mercifully for us, because we like competition, the Australians are beginning to give you a run for your money. But the truth is that what Canada might not recognize about itself is the mining and exploration ecosystem in Canada is unmatched. Mining over Canada is, of course, about mining on the ground in Canada, from Newfoundland all the way across to BC. But what Canadians don't take note of or take enough pride in is, in fact, the mining service sector in Canada, be it the export of Canadian technology and engineering, or the good work done by the mining financial services industry in Canada. The truth is that urban areas in Canada, particularly Toronto and Vancouver, probably benefit more from the mining industry in Canada as an international service industry than rural Canada does from direct mining activities. And Canada needs to take note of that, I think. Worldwide, the epicenters of mineral exploration finance in particular are Canadian, as a consequence of your regulatory and service infrastructure, as a consequence of a few very high caliber, very high energy entrepreneurs. And it's an asset that, while misunderstood, is valuable. All around the world, economic development strategists say, develop centers of excellence like Silicon Valley has done, or other places like that. Canada has done it almost accidentally, in the sense that government policy is, if anything, negative with regards to the centers of excellence. It's come about in a very organic sense. But that notwithstanding, I would argue with you that the greatest assets that Canada has in mining aren't mines in Canada, but rather the intellectual capital and the infrastructure that you've put in place. And you need to be congratulated about it, and it needs to be the subject of a national celebration.
Well, perhaps not being humble about it is a good start, but I've had many people I've chatted with along this way, say that Canada to mining is what Silicon Valley is to the tech space. And so, I hope that, for growth, that we continue to go down that path, because it definitely does set us apart. On that note, you have spent some time, I don't know if it's recently or your whole career, but you've made it a really big part of your mandate to mentor and to speak to the next generation. Can you tell us about some of the work that you're doing there? Because I think, that's part of what this is all about as well, is making sure that we're keeping the next generation engaged with the mining sector.
I need to preface that there's been a lot of discussion about the fact that I've been a successful mining investor, and I was described once as a self-made man, which is ridiculous. I benefited early in my career from having absolutely spectacular mentors, and I think it would be disingenuous for me not to, as the phrase goes now, pay it forward. It's also very pleasant. I'm expecting to live to a very ripe old age, and so my hope is that some of the lessons that I have learned benefit me both directly and indirectly. So I've attempted in a variety of topics to make whatever expertise and knowledge I have available to younger people. I mentor on social and political topics through a student organization called Students for Liberty that talks about individual liberty, an individual initiative worldwide. Mercifully, we have 150,000 young people now in Students for Liberty, which makes me extremely optimistic about the future. And I've enjoyed mentoring young people in mining, extractive industry, and finance too, from a variety of circumstances in a variety of topics, including organizations like Young Professionals in Mining. But more importantly, where I have the opportunity to now, I'm mentoring students in emerging and frontier markets. And when I'm invited or allowed, I'm also as active as I can, mentoring and teaching in Aboriginal and First Nations communities. I look at the changing face of mining, and I mean that literally and figuratively, and I'm delighted at what I see. When I looked at the mining industry when I was a young man, all I had to do was look in the mirror. It was big white guys, usually blonde, by the way, for some strange reason.
Even a hair color that was stereotypical.
And while that was probably useful to me, it was a suboptimal outcome. The idea, speaking to a young woman in mining, that for 30 years the mining industry didn't invite to the discussion half the IQ of humankind, never mind right or wrong, it's stupid. We as a people can't afford to disenfranchise half the potential answers. The same goes to, what's the politically correct phrase? Visible minorities.
Okay.
The idea, as an example, that Caucasian expatriates from Calgary would be better placed understanding exploration or construction or production challenges in West Africa beggars the imagination. The face of mining is better in every regard now. It's just that it isn't my face. It's a younger face. It's a South Asian face. It's an East Asian face. It's an Aboriginal face. It's an African face. It's a female face. It's fantastic.
You know, I chuckled when you said that about the hair color, because my father, who got me into the industry, is a big white man who has blonde hair. And I owe him a lot of thanks, because he definitely worked very hard to open every door that he could for me. So I'm thankful for, going back to that mentorship. We have to kind of engage with other people and help open doors for them, right?
Anna, thank you. I know your father personally, and to have you describe he or I as A, having hair, or B, any longer having blonde hair as opposed to gray hair is, let's just say, disarmingly flattering from your point of view. Not wholly accurate, though.
So I do want to touch on a little bit more on the diversity. There's a bunch more I want to get into with you, but I want to touch on that a little bit, because I think what's happening now is, and the reason we want to have this story at the CSC is, I think the next generation really finally came to the market. Cannabis is easy to understand. It's sexy. It's the valuations are a bit simpler. The management's cooler. Some of them are rappers. And I'm not kidding. And I think that one thing is it's very technical, and it's a steep learning curve in the mining sector to understand things. I think there's also maybe some misnomers about what the mining sector is. And how much of it we use on a daily basis, on everything that we touch other than what we eat. And I think stuff like ESG, CSR, diversity, these are things that are really important for that next generation. And you said something last time we chatted that really meant something to me, is you said CSR should not have been called corporate social responsibility, but corporate social opportunity. So can you elaborate on that a bit?
Yeah, this is sort of a hot point with me. We began it at the top of the interview. The idea from a pragmatic point of view that we involve women in mining may or may not be about correcting historic injustice. What it's about from my point of view is, how do we get the job done? Why on earth would we not involve half of humankind in the search for talent? The idea that we don't do this is, never mind morally, it's arithmetically challenged. We have enough problems attracting the best and the brightest to the industry. If we confine the invitation list to 4% of humankind, what's the probability that we actually attract the best and the brightest? Similarly, and we talked about this earlier, with regards to depending on the phrase du jour you want to use, Aboriginal or First Nations involvement. I think I related to you that 7 or 8 years ago, I was at an AIM BC conference, and there were 2 speakers before me that I listened to. One, an Aboriginal guy talking about the dearth of employment opportunities in rural northern Canada and the lack of skill sets afforded and the misery and the fact that those areas were being depopulated. as a consequence of their economic circumstance, a young population that was demoralized. The speaker after that was another old fat white guy like me, talking about the fact that the expertise in mining, all the way from the jackleg operator to the financier, was dying, literally. They were my age, and they'd lived hard lives, most of them, and that it was increasingly difficult to attract skilled labor, young labor, from southern population centers like Vancouver to northern population centers. And I pondered publicly in my speech what would happen if the two speakers before me ever got together. In other words, if you combined a young, motivated population that needed work, that wanted to live in the north, with the requirement for a young, motivated population that wanted to live in the north. It just seemed to me that that was a marriage that had to happen. And to Canada's great credit, and to the credit of a younger generation of both Aboriginal leaders and mining leaders, this is happening now. If you look, as an example, in the area that I'm most familiar with in this context, northwestern BC, the collaboration between the industry, and in particular, the Tahltan and the Nisga'a First Nation, in every circumstance, is an unblemished triumph, a partnership in the truest possible sense. And from a regulatory viewpoint too, it makes sense that the regions, irrespective of how they're populated, become more important in the regulatory process. The idea, I mean, the traditional plague of mining, or one of the traditional plagues of mining, have been that all the social rents, and they're huge, offsets, taxes, royalties, they all accrue to the centers, to the capital, and all the costs are borne by the region. The joke in Latin America is the capital gets the money and we get the shaft. That's how they relate to mining. That's needed to change, and that's changing. The idea that in Tahltan country, as much as possible, we are regulated by the Tahltan, so that the social rents from mining go to projects that benefit the community. From the community's point of view, is both efficient and, from my point of view, pragmatic. The idea that the Tahltan will have greater tolerance for the disutility of mining, as long as they have access to all of the benefits of mining, and in particular, as long as they shape the consensus around mining, I think is fantastic. Corporate social obligation? No. Corporate social obligation, if you viewed it as a have to, either from the point of view of the Tahltan or from the point of view of the mining industry, that's an obscenity. Opportunity is what it's about. Opportunity for the Tahltan, opportunity for the Shkukumloksha, opportunity for the Nisga'a, and opportunity certainly for the population of British Columbia, for Canada, and for the mining industry.
It's so neat to see that this is maybe evolving, and I think Canada usually is pretty good at being, a leader in that regard. I know that our relationship with First Nations hasn't always been, at that perfect ultimate level where everyone's getting what is owed to them, but I definitely see it moving forward in a better light. We've had the opportunity in Mining Over Canada to talk to many different band leaders, and they see change happening, and they see that their community is getting engaged with the local mining community. We're starting to see that happen, which has needed to happen for some time.
Our mutual friend Jerry Asp, a hero, consults now with Aboriginal peoples around the world about how to fashion a social and political consensus within their communities, how to actualize that social and political consensus within regional and national political debates, and how to engage with the mining industry. Jerry, as you know, isn't a political scientist. He isn't a sociologist, at least by degree. and he's certainly not an engineer. What he is somebody who has helped preside over the emergence of the Tahltan First Nation in 30 years. And he just offers up very sound advice based on the experiences that his people have enjoyed around the world. And this is one of these unsung Canadian exports. I was going to say expert, that's true too. Exports that Canada needs to celebrate.
Well, and I think, maybe this word is thrown around a bit too much these days, but I think, he is the epitome of a thought leader. And, the more and more that we have of that, the more great change that can come. I'm going to pivot a little bit because I want to make sure that I pick your brain about what's going on right now. We are seeing, unexpectedly so, or maybe expectedly so, we're seeing a bit of a mining market. I think this is surprising, maybe not to the analysts out there who watch this happen every day, but I think to the rest of the audience paying any attention, it's first of all a little surprising to happen during a global pandemic when the world has been shut down. But also I think, happy to see it happen, but we've been waiting a little while. Can you talk about what's happening right now in general in the mining sector?
Yeah, I can. I think that there are several things that people who observe this from afar need to understand. The first is that we had a recovery from an oversold bottom. It's true in every capital-intensive cyclical business that bear markets are the authors of bull markets. Recoveries from oversold bottoms are exactly what happens. A word of caution for the future, bull markets are the authors of bear markets too, so be careful what you ask for. But the bear market that we went through was really, truly one for the record books. I'm told that the junior resource indexes in Canada fell by 88 or 90% in nominal terms between 2011 and 2019. So if bear markets are the authors of bull markets, it makes absolute sense that since we had an epic bear market, we're coming into a pretty good bull market. But beyond that, and you reference COVID-19 among other things, I would argue that in the next 5 to 7 years, we'll witness two bull markets, a precious metals bull market and then an industrials material bull market. The precious metals bull market, I think, is well underway. And the reasons for that shouldn't surprise anyone who pays attention. Gold does well when savers are concerned about the purchasing power of their savings denominated in conventional savings instruments. Particularly, and I know this is American-centric, but particularly US dollar savings, and more particularly the US 10-year Treasury. And the value proposition opened up by the US 10-year Treasury is horrific for people. My friend Jim Grant describes them as return-free risk, but let's go through those challenges. In the first instance, let's back up. The political circumstance that we find ourselves in around the world is largely democratic, which is good. But the political process in a democracy is an ongoing war on savers by spenders. That's the nature of a democracy. Perhaps in Canadian parlance, you would say an election is a decision-making process by which 4 wolves and a lamb vote on the lunch menu, the lamb being the saver, of course. This manifests itself in a whole bunch of ways that are hard on savings. The first is quantitative easing. If you quantitatively eased, if you printed up Serins, that would be counterfeiting and they would put you in prison. If Parliament does it, it's policy, it's popular, and it gets them elected, but it debases savings. The second is debt and deficits. As obscene as they are in my country, they're actually even more obscene in your country, which is terrifying. This goes both to the quality of the issuer, which is to say the government, the increasing risk in government-denominated securities, but it also goes to the crowding out more productive uses in capital markets. But at any rate, it's bad for savers in other instruments. The most difficult for the economy and the best for gold is, of course, negative interest rates. If you understand that the value of your conventional savings gets eroded by the deterioration of the currency, and you can't make up for it in the interest rate, obviously that erodes faith in conventional savings products. And those three factors, quantitative easing, debt and deficits, and negative interest rates, I think have been in the cards since 2015, 2016.
Yeah.
I'm surprised, frankly, that it took so long for them to manifest themselves. The fourth is less widely known, but needs to be considered by your audience, which is to say that the market share of precious metals and precious metals related assets relative to other savings and investment products is, from a historical standpoint, very, very, very small. It is estimated that the market share of precious metals assets in the United States market is less than 0.5% of total savings and investment assets, which is to say that gold, most investors still can't spell gold. The 3-decade mean is between 1.5% and 2%. So gold wouldn't have to win the war against the Canadian dollar or the US dollar. It just needs to lose it less badly.
Right.
If the market share of precious metals related investments were to revert to mean, which is to say 1.5% or 2%, the demand for those assets would between triple and quadruple in the largest savings and investment market in the world. And that's, I think, what's going to happen. Now, I would argue that in Canada, the response, when I say in Canada and the United States, the response early on in the bull market has been too narrative driven, which is to say that there has been too much attention paid to the very, very small, very speculative end of the market, and not enough paid to the beta end of the market. But I think that'll correct itself over time. And the other thing I would say that will make me popular with your listeners, I think, is that precious metals bull markets are misunderstood in the historic context. I think that many commentators view a rally from an oversold bottom as being a bull market. There have been 9 of those in my career. And while they've been dramatic, they've been brief. They've been 2 bull markets in my career, 1970 and 1981. 11 years long, and the other 2000 to 2008 or 2011, depending on how you count. So if we look at this bull market as beginning in 2019, which is when I see it beginning, we are perhaps 2 years into something that has historically been a 10-year market. That's the duration argument. The dimension argument, too, I think is valuable. Leaving out the 1970s market, which began from a price-controlled base, the 2000 market began with gold at $252 an ounce and cleared up to $1,900, which is to say a 6.5-fold increase. So when people say to me, Rick, the gold price has in US dollar terms increased from 1,100 to 1,800, have I missed the game? My temptation is to say I'm not a market forecaster, but I'm a bit of a historian. And in the historic context, or also measured against the fundamentals that move gold, which is to say debasement of the currency, the answer is no.
Wow. And I'm still digesting everything you said. I'm probably going to have to take the opportunity to rewatch this to absorb that all. That's, I think, very helpful for people to take a look when they're looking at what's going on. They need to understand some of those fundamentals because they should be implementing some of those ideals into their due diligence process when they're making their decisions. What is, and you did touch on this a little bit, but how do you think COVID-19 is going to affect, and I'll leave this one open for you, how to end that, whether you want to talk about capital markets or the mining industry or gold. How is COVID-19 going to affect it?
All different answers. The mining industry has done a spectacular job operationally dealing with COVID-19. Be it, as an example, Ivanhoe Mines' construction project in frontier markets in Katanga, where they have managed to enforce health standards on 5,000 workers whose educational backgrounds are not what one would have hoped, with virtually no COVID-19 problems. The idea that we can build mines in frontier markets, that we can send hundreds of people down shafts in crowded, warm, damp environments, and manage it. The mining industry, in terms of workplace safety and health subject, has done a truly heroic job, much to my surprise. I still remember the industry that existed when I was a young man. And believe me, had my generation been in charge of this response, it would not have worked out as well as it has. With regards to COVID-19 and capital markets, I have two comments. The first is that I don't think that capital markets have taken into account the impact of the economic slowdown wrought by COVID-19. And I think that's because of artificially low interest rates. The fact that the governments have made so much counterfeit money available has, I think,
pushed away reality.
Yeah, inured people to reality. The disconnect between Wall Street and Main Street, or in Canada, Bay Street and Main Street, is a broad gap, and I don't like the way it likely fills. The third thing, however, again, with regards to precious metals, is that the policy response to COVID-19 is the same as the government policy response to every crisis, which is to say, use it as an excuse to spend and reward your friends. Once COVID-19, passes its course, there will be something to take its place, likely global warming or something else. There will be some enormous crisis that the political class uses to consolidate their power and debase the currency. But from the simple self-interested point of view of gold speculators, the policy response to COVID-19 can only make your gold stocks and your gold perform better, sadly.
Yeah. One thing I'm wondering if you're willing to share with us is, when we talked last time, one concern I have for people out there wanting to invest in the space is not necessarily what is in their due diligence process, but just that most people don't have one. So I think we could all just start with getting one, and that's a good place to start. Do you have any advice for somebody wanting to invest in the mining sector, something that they should implement into their due diligence process when looking at stock?
What I do, and I've done for a long time, is every time I buy a stock, I write down why, what it is that I'm hoping to accomplish, what attributes are important to me, what I think I see that other people don't see, which is to say, why do I find it more attractive than the broad market? Why is it inexpensive? What are my goals for the investment of the speculation? And what would cause me to declare either victory or defeat? I think, we ask entrepreneurs to have a business plan, and your portfolio is in fact your business. So you should have a business plan too. In speculation, I think there's three further things that you must do. The first is that in order for a speculation to be successful, the company must answer an unanswered question. Some piece of information needs to come to light that allows you to view the value of the asset or the business more clearly and assign more value to it. Asking yourself simply, what is the unanswered question, will eliminate probably 50 or 60% of the mistakes. I have been at investment conferences for 35 years asking issuers to answer the unanswered question. And fully 80% of the issuers that I ask the question to don't have an answer, which is actually really useful to me because I don't have to talk to them anymore. I don't have to waste any time. Yeah, I don't have to waste any time with that loser, right? I can move on. Having asked that question, you need to ask the company and yourself, how much time will it take to get an answer to an unanswered question? What is the probability of a yes answer? What is a yes answer worth, more or less? And what is the probability of a yes answer? If, as an example, in the mining business, it's going to require a few exploration holes to determine whether or not a surface anomaly extends to depth, will that be accomplished in one field season or two field seasons? If it's 2 field seasons, it'll take you 18 months to get a yes answer. And if your expected holdings period for the stock is 3 months or 4 months, why would you do that if it would take 18 months to get the kind of answer that would justify your speculation?
It's
And
funny
then
'cause that just seems so obvious, but exactly, right? I mean, it just seems so obvious, how long you're willing to participate in that company should directly correlate to potentially some kind of information that you can find from them.
I would say that the last thing around speculation involves Pareto's law. For those people who haven't studied old, odd philosophers, Pareto was the one who first documented the social science phenomenon that's popularly regarded as the 80-20 rule, which is to say that 20% of the population generates 80% of the utility in any particular task. There's a couple things about Pareto's law that speculators need to know. The first is that it's a bell-shaped curve, which is to say that there's 20% of the population that generates 80% of the positive utility. There's a very different 20% of the population that generates, if you will, 80% of the disutility or aggravation. So the first challenge is to hang out with the good 20 and avoid the bad 20. The second challenge is to understand that in an asset class the size of mining, with a population base the size of mining, that you can run the 20%, you can run the lip through the same performance dispersal curve, and it conformably aligns, which is to say that 20% of the 20 generate 80% of the 80, or 4% of the participants generate 60 or more percent of the utility. The reason that I bore your listeners with this is that if you merely try to find that group of management team, that 5% group within Canadian mining that have generated 60% of the utility, and you ignore all of the rest and every other blandishment to invest, you will improve your performance. If I, in the last 30 years of my career, had just focused my efforts on the 10 people or groups that I had the best experiences with in the decade when I was in my 30s, I would have worked half as hard and made twice as much money. There's no particular reason why young speculators should emulate some of my failures.
Well, I mean, the wisdom and knowledge that you've gained obviously is one of the value adds of some of maybe the right mistakes and the wrong mistakes. Rick, I can't thank you enough for joining us today. I feel like we could do this forever. I would love to have a part 2. So maybe I'll be able to book in your busy schedule and we can have more chats about it. You will be joining us on November 24th for our live event, which will be a cross-country discussion. And we'll have many more experts such as yourself. So thank you for participating in that as well. Any final notes for our listeners? Is there, I asked you this last time and I thought it was really interesting because I think most people would shy away from this, but I said, what's a resource that you like to use? And, to let people know where they could be looking for information, and really pushed on the fact that you connect with your center of influence. And I think maybe people shy away from that sometimes. And, there's nothing wrong with calling the company and talking to the geologist and getting somebody's opinion that might have a place of expertise.
I'll go you one further, if you'll permit me. I would urge your listeners to contact me directly, and I'll give you an inducement. Any of your listeners who come to a website, I'll forget the W's, SprottUSA.com/rankings. You'll find a database there, a drop-down sheet. And if you enter your natural resource stocks on that database, I personally will rank them 1 to 10. No cannabis stocks, please. No banks, no things I don't understand.
Well, I'm going to take that challenge, actually, Rick. I'm going to do it, and I challenge our audience to do it as well.
Well, I will also comment where I think my comments have value on issues. And in addition, I will include a copy of the Barron's Gold Mining Index, which is the most inclusive gold equity index in history, and a 100-year commodity chart. So the quote expert that I can recommend with the most alacrity is myself. And so we'll do that. I'll give your listeners an inducement to get in touch with me. Understand that this isn't investment advice. I'm not ranking portfolios. I'm only ranking companies, and I'm doing it based on my own paradigms and prejudices.
Well, I appreciate the clarification. Listen, that's a really wonderful offer of view, and I really hope people take advantage of it. There's just, if you're trying to wrap your head around this sector, you are the people that we should be turning to, to go down our path. And the mining sector is just so interesting. I've been so amazed at the technology that's coming out of the space. I've been amazed at the diversity that I'm seeing in the space, and kind of the forward moving elements of it. So it's been a real pleasure to get to know what's happening today in the mining sector. It seems to be one of those sectors COVID really hasn't had too hard of a time taking down, and hopefully that keeps being the particular spot that we're in, especially being such a resource driven country. It's very important to us. Thank you again for all of your time, Rick. I really appreciate it.
A pleasure. Give your father my regards.
I will.